Good evening, everybody. We are at the end of a short trading week, getting ready for the Easter long weekend. Let's talk real money, because as promised, today, let's talk gold. So before we really jump into gold, we do have to talk about Russia and how the Russian Federation and their actions by their central bank has triggered an increase or a potential run here in the price of gold and weakened the US dollar to the ruble. So essentially what happened in late February, early March, the US, among other nations, began to increase their sanctions on the Russian Federation. As a result, the ruble absolutely plummeted in value, plummeted to almost worthless. So what ends up happening is the Russian Federation, towards the end of March, decided to peg temporarily their currency, or the ruble, to gold. Now, I believe the exchange was 5,000 rubles per gram, which translates to roughly $1,300 US dollars per ounce of gold. Now, as a result, the ruble recovered quite substantially, I believe about 75%, if not a little bit more by now. But that also caused the price of gold to increase quite significantly, which is why we've seen a spike in gold, or one of the reasons we've seen a spike in gold over the last couple of weeks. Also, we've seen a weakening of the US dollar to gold, not to the Dixie, because the Dixie is also a relative index, which we'll talk about later, but it did weaken it to gold, which is why the value of gold has gone up to the US dollar. Now, not only that, Russia also began demanding payments for their resources in rubles or gold. Now, how does that impact gold prices and the US dollar? Well, it's simple. If you're no longer needing quite as many US treasuries in order to make purchases on the international level, and instead you're now dealing with the currency of that nation, i.e. the ruble in this case, you're going to start to purchase more rubles for the purpose of having a reserve so that you can continue to purchase resources. Now, regardless of what we've heard as far as sanctions are concerned, nations are still purchasing a significant amount of resources from Russia. And as a result, they still need rubles or gold. Now, if you're thinking about how you can purchase in gold, well, the value of gold is going to continue to go up as a result of the demand. Let's face it, there is a paper to physical gold shortage there, roughly 250 paper ounces to 1 ounce of physical, which we'll touch on later as well. Now, if you have nations that are starting to not need US treasuries quite so much, well, internationally, that means that the US dollar losing its grip as the general reserve or transactional currency starts to drop. Well, because we can take a look at even further. Not only is Russia demanding their payments in rubles, but Saudi Arabia and Iran have both agreed to deal in crude, or dealing with crude in yen. So again, a decrease in the amount of US treasuries or US reserves sitting, because they're no longer necessarily dealing only in US dollars. As a result, the US dollar continues to drop in value relative to gold, and as a result, gold will continue to move to the upside. The thing is, right now, we also have a very significant demand for gold in general, as nations and individuals are starting to turn to the precious metal for the purpose of preservation of their value or wealth. So, what could happen here? Well, potentially, if there's enough of a demand or a run on the COMEX, being that there's a 200 to 1 ratio of paper to physical gold, that essentially means that there is a request or an order of 250 ounces for every 1 ounce of physical. For those that don't really understand what that means, is essentially I'm coming to you saying I want 250 ounces that you promised me, but you have only 1 physical ounce. That could potentially collapse the COMEX if there is a true run on gold. So other areas we're going to take a look at is how gold can continue to increase in this existing or current market. Well, we have inflation. So inflation, as reported earlier this week, was 8.5%, the CPI. Now, that is based on the current calculations. However, if we take a look at shadow inflation via shadowstats.com, we can see that if you use the 1980s calculation for inflation, we're actually closer to double the percentage. So we are well into double digits for truer inflation if we use a more historical calculation. Now, what does that mean? That means that the dollar relative to the Dixie, although is gaining strength, the true value of the dollar continues to slide. Whereas now more money leaving the US dollar or is required in US dollars to purchase gold. Again, another reason for the upswing in gold at this point. As I mentioned, you do have Saudi Arabia and Iran now dealing or willing to deal in the yen for the exchange of crude. But here's another one. China is actually increasing their commodities exposure on the Shanghai exchange. Now, what that means is that there's going to be, again, significant increases in the amount of currencies being used or in the yen. As a result, again, a decrease in the need for the US currency on the international level. If we take a look at supply chain issues, which is also a factor that's going to play into the decreasing in the US dollar, just because we have a shortfall. There's just no need to maintain reserves at this point since there's going to be a very significant supply chain issue. Not to mention that brings in the conversation of silver, nickel, neon gas for semiconductor productions. And then that leads into additional information on why gold can continue to go up or additional reasons for gold, geopolitical. As we continue to march along with the Russian-Ukrainian issue or crisis, we will continue to see additional crises developing internationally and globally. So if you're expecting this Ukrainian-Russian situation to kind of subside anytime soon, you can forget about that. The truth of the matter is it's probably going to drag on for quite some time. We will eventually see additional, more significant crises, believe it or not, more significant crises start to come up. And I don't mean that the Russian crisis is not significant. It is a loss of lives. But what I mean is on a even larger scale than what we're seeing now with the Ukrainian-Russian situation. But then essentially it's going to be a crisis to crisis leapfrog, a turbulence in the economy, turbulence in the markets, all eventually going to lead to an increase in gold simply for the store of wealth due to fear. But there is one area I do want to focus on, or at least one article I do want to touch on. It was actually released today on the Sprout Money by John Hathaway, and I'm just going to read one paragraph out of it. So the Russian response on May 28th and April 3rd circumvents the US dollar to settle international trade. Russia temporarily pegged gold at 5,000 rubles per gram or 1,300 per ounce at the time of the announcement. In the weeks following the announcement, the ruble rallied 73% to recover substantially all of the damage inflicted by the sanctions announced on February 26th. Once the ruble revalued in line with the prevailing US dollar gold prices, the Central Bank of the Russian Federation removed the peg, but the message was loud and clear. Russia prepared to back its currency with gold as or when needed. Using a ruble gold as peg as a reference price, the US dollar has been cut out of the trade loop. To import energy from Russia, buyers must pay either rubles or gold. Sellers will no longer need to park proceeds in US Treasuries. And just to kind of jump onto their final conclusion in their thought here, in conclusion, and mine, it is our opinion that the investment fundamentals have improved dramatically for gold. That is why, in our opinion, significant upside lies ahead for gold bullion and gold mining equities. Now, this is not necessarily a recommendation. Please understand that investing in gold is very risky, has a tremendous amount of volatility. Make sure that you speak to your advisor to ensure that it's a proper position for you. I know for myself as a gold bug, it is an important part of my portfolio, but that doesn't mean it's right for you. That's it, everybody. For now, that's it for gold. That's it for real money. I will see you all most likely on Saturday for my market preview for next week. Have a wonderful long weekend until then.